Welcome everyone to the Kendall Report. It is Wednesday afternoon. Trying to be very efficient today. I actually have a meeting I have to be to, so we're going to be pretty quick today. I've got at least about 45 minutes. We'll see how it goes. Very interesting day again today. Sideways, we had the RTX sell signal. We got absolutely flat on the S&P. It was down just slightly, 0.00 something, wasn't even worth mentioning. NASDAQ up 0.24, and the Russell had a decent day up 0.47. So not too bad in the indices, I guess, from maintaining after yesterday. And there was interesting sell-off intraday, and I apologize for those of you watching on Twitter and follow me on Twitter. I actually should have been a 44.29, 44.32 number. I accidentally fat fingered it in the middle of, I wanted to get it out real quick and didn't read it very well. So I apologize for that, but I think you got the point. There's actually a really good rejection point off of there today. So we'll talk a little bit about basically coming into that R1 level that I talked about yesterday. So we're just kind of locked in this range again. I think somebody already mentioned, we get another, at least one more day sideways, maybe a little bit down. I still see bias to the downside. If you saw when we printed that 44.29, it was hard down, all the way down just about to 44 even. So a pretty good 30 handle move. And then boom, bounce back at the close up back to 44.22, where we're around that level right now. A couple things that was maybe interesting. The central bankers had a little party in Portugal, I believe it was, and they had this woman from CNBC, very retail type questions that she was asking. She was trying to do leading questions with all the central bankers, and they all had the same story, basically. They all responded the same to all these. So she was trying to set them up to say something. And fortunately, they were smarter than she was. I didn't mean she's stupid or anything. Just saying that she was trying to trick them, and they knew that they actually acknowledged that, like, nice try. But nothing really came out of that. She asked a question, though, that was interesting. Do you all talk before your meetings, and do you coordinate? And the answer is, I've been telling you they have been very coordinated, and that is the case. What we're seeing here really is interesting in that their stories are slightly different, but in the end, the hypothesis is the same. Inflation, inflation, inflation. The banker from Japan was absolutely hilarious. He should start a stand-up routine. He could make some pretty good bucks being a stand-up comedian, but he was pretty funny. But overall, everybody was in agreement that we need to do more. We don't want to stop early. Markets didn't really respond to it a little bit. Maybe that was part of the sell-off when they stopped talking. But the reality is that they're going to continue to raise rates, and they should raise rates. As I've been telling you, that's what's going to happen, not because I think that's what's going to happen, because that's what they're telling us is going to happen. And they're pretty committed to that story. And I think there were some conversations about, to Paul, why didn't you do something? Everybody else raised, but how come you didn't? And basically the story is what he said. Hey, we want to slow the pace. We want to look at the data before we do it. But they're pretty committed that he said that at least 2 more raises in rates, and probably whether they're consecutive or not, or every other meeting, something like that. Who knows what they end up doing. It'll be somewhat predictable anyway. I do want to talk about something. There's some comments in the stream yesterday I just wanted to address. Somehow, since I'm giving Paul and everybody an A+ on the so-called, do air quotes, soft landing routine, the reason why I'm giving those grades out, because they have done a good job. And it's not necessarily People are telling me, all these books to read. I understand the Federal Reserve. I'm not a huge fan, but it is what we have to deal with. And my job is to look at what we have to deal with and make some type of analysis on that. I don't know if I guess the dialogue is that they've been, behind the curve. Well, it's kind of argued that they're behind the curve, and the inflation situation just kind of blew up. And Powell did say something I think interesting today, but he said it before as well, as he doesn't see inflation breaking until 25. So not this year, not next year, maybe in 25. So what it really telling you, and I've been telling you as well, is these rates are going to be higher for longer. They're not going to adjust rates on the slightest little inkling of, markets are getting a little adverse or something like that. We will see. Markets don't go straight up. We will see some sort of sell-off to come in, some sort of top to come in. I'm not sure we're there yet. I think we possibly for a little minor top, but you'll see when I cover the database, some of the things that I suggested were likely to happen did happen. I'll go through that here in just a minute. But we're really just looking at the Fed doing what they're saying they're going to do. The markets are just continuing to consolidate. As I pointed out yesterday, is we are a lot closer to an all-time new high than we are a new low off of this pattern. And so it doesn't mean that I'm calling for all-time new highs, but the markets are positioned pretty well. And next week, I'll go through my typical longer-term viewpoint once we finish this month. At the beginning of each month, I'll bring up the quarterly and the monthly, and we'll do a long-term dive into the trends. And the last trend, if you remember, was still looking pretty good. Here it is, end of June, still waiting for the sell in May and go away, folks. We're still printing up at the highest levels that we've been for a while. So just know that that pattern is continuing, and there doesn't seem to be anything out there that's going to break it as far as any kind of material news or switch and everything. So let's talk a little bit about tomorrow. We've got a couple of things. We've got the third revision of GDP coming out. I made the headline because it was just tough to find anything. GDP to surprise ? And the reason why I put that out there is if we look at all the metrics that have been coming out, they've been coming out much better. So maybe they were 1.3 last month. Maybe they bump it up to 1.5. Does that matter? Does that change market sentiment? Probably not, but it's something to watch for. The algos are looking for something to buy off of, and we still have in the backdrop some of that window dressing that I was talking about, of this basically rebalancing routine that goes on at the end of the quarter. So that's still out there as well, and they could run another round. I'll discuss that here just in a minute. But we're definitely looking at the world that is coordinated in the effort against inflation. The central bankers are calling each other and deciding what to do, not necessarily for their individual countries, but they are looking at a commonality in the theme. It seems very obvious in the Western banks as far as that goes. So one of the things that I wanted to talk about, I saw this once again, this rebalancing trade, window dressing trade, whatever you want to call it. I saw that emerge again today, and it was very interesting. The same patterns were set up yesterday. Yesterday, we didn't get the break that we got today, because yesterday just kind of ground up, a little bit of a backfilling at the close. But as we came into this morning, we traded down, rallied all the way up, made a new high from yesterday, and then got blasted for 30 handles. And then the volatility just continues. You'll see when I go through the hourly chart here in a few minutes, the volatility bubble is pretty big right now. So the swings are fairly drastic. And oftentimes when we get those type of swings, there is a directional change trying to set up. Let me just look at my notes here and make sure I've got everything. But yeah, so be aware that out of nowhere we could get that buying frenzy that came in yesterday. We saw it today. Even when there was a little bit of dip, like I just said, at the end of the session, there was a rally around the tweet that I put out. I mentioned the 4408 number. That was a key number from the standpoint of support intraday, and we kind of bounced off of that at the end of the day. So if I did put 42 on there, forgive me, it was 44, but that number is still out there. And yeah, so let's go ahead. Let's go through the database. Now remember, database is yesterday's print, not today. It hasn't run yet. But let's go ahead and take a look at that, see if we can get through tonight's stream fairly efficiently. All right. Didn't mean to have that page up, but here we go. Must have pulled the wrong version up. I did. Here we go. All right. So we're at 56.8 on the database. That's just not even, that's basically unchanged. If you recall, I told you what we're likely to see, even though there was a big update, that we don't get any big new traction. It's just kind of a rotation day. Well, 320 buys versus 322 sells, so almost exactly the same numbers on both sides of the equation. So no bias either way. One of the models did have a little more bias when you combine them as a whole, but not a lot. So the 1.2 model had 133 versus 95, where the 3.2 model at 197 versus 227. So when you add them all up, they kind of come up to basically an even number from that standpoint. So nothing really there. What's my expectation for today? More of the same. I still think we see the database back off to around 48%, around that level. We should start to see a bottom of some sort from that standpoint. All right, let's get into the S&P. As we look at the hourly chart, these are this bubble that I was talking about, where we came in off of the initially this morning and rallied up, and then we got this giant reversal. I've got my cursor on there right there, 44.30.25, all the way down to 44 even 0.75. So a nice 30 handle reversal, and then it just clawed right back toward that high. And this is that trade that I was talking about. I don't think I have it set up. I wish I did. I'll maybe show you this tomorrow night. But the intraday stuff was very interesting from the algo standpoint, because we did get a trigger on the pattern, the Wavetech patterns, right at the high, and it was a really nice. There was a couple trigger points right there that really signified that reversal, and then on the upside we saw the same on the upside. But the bottom line is what we're seeing on the PPMs. This is hourly now. We're looking here for a little bit of a push up, and then back down probably into this 10-period moving average. So 44.17, 44.14 should be numbers that you want to watch overnight. And it looks like that upward slope is going to continue. So just maybe there's some decent news coming out of some of those numbers that we're looking at. I didn't mention them, but claims is also coming out tomorrow, 266, and continuing claims 1.759. We'll see if those, I don't know that they're usually deemed as a material number to come out. I'm not sure anybody's really watching them at the moment. But this pattern looks pretty well intact, as you can see. Now I've got the algo set to look out 50 bars, and very soon I'm going to show you this intraday chart I've been using, which sounds completely bizarre, but it's a 5-second update, and I'll explain it when it's time. Yesterday was one of the more interesting days I had trading in a while, I would say, because of the not only the configuration, but it was like a major education day for me using some of these new algos and some of this stuff. It was I can't wait to share what I found yesterday. It'll be pretty cool, and I'm going to need to find some time where I can be live when primary markets are trading. So we'll work on that over the next several days. But the bottom line is these algos are in pretty good shape. Let's flip over to the daily here real quick. And you can see we got basically RTX, we got sideways. It shows from a future standpoint we're obviously able to trade higher. But this is where I think the patterns are interesting, is that we are seeing some potential move to the downside. I've been talking about this for a couple of days, that we're probably going to get sandwiched between the 10 and the 21. It still looks like some potential downside. It looks like today might be an uptick. Maybe this has to do with that number, but as we come into the end of the week, it looks like we could ultimately fade into back towards 43.80, 43.75. There are some Fibonacci targets here as well that need to be paid attention to. 43.80, 43.37, and 43.10 is the extreme. And you see this green dotted line here. Let me just blow this up. I want to point this out. This is a big line. So if you have the indicators, when you see an extension like this, this is a pivot level. So this is very significant, right at 4,300. That is really kind of a drop dead number. Typically, that if you get through that, then the markets can decline quite a bit further. But there's a but. We have the 40-day. I went through a fair amount of detail yesterday's video. The 40-day and the 10-week moving averages are right there with a very high level of probability on the upside right now. And I'll just throw the probability map on right now. You can see we still have a 40% probability that the market's going to remain above that 21 period moving average. Actually, that's a 40% probability it will penetrate, a 60% probability that it will stay above. So just giving you the probability of fail right now, and that's only 40%. So you still got six times out of 10 you're going to probably hold that number. So that's why I'll continue to talk about a potential bounce here. But like I said, as these algos start to weaken, we'll see these percentages go down and everything will start to falter just a little bit. And ultimately, I think we get some kind of sideways pattern that comes into this area here wrapping into these moving averages. So the 40 is coming up, which will also be the 10-week. It'll fine tune itself, coming right into around 43. We'll just call it 4,300 to 4,340. That's going to be really solid, and I think that's going to be the place where you're probably going to get a next bounce. And it would be really nice if we do consolidate into that range, because that'll give enough of the market to kind of refresh and get all the technicals back in play for another potential run for the roses up to about 4,500. And of course, we're coming into the end of the month, so we'll see what kind of window dressing / rebalancing that we get just before we end the end of the month. Back to the daily. It's interesting on the NASDAQ. Looks like you're seeing the PPMs are really tailing off here. So we're getting a higher probability for us to roll down into this 21 period moving average. PPM2 is still 0.24. So let's turn on the probability map here real quick. So looks like we've got a pretty good chance, which we've already done, of penetrating through the 10. There's still a 6 out of 10 chance we're going to hold this 21 with the PPM in trend mode. That's pretty much what trend mode equals, is that 0.6 level to hold. So that there's really a strong possibility that even if we trade down there, we're going to get another little bounce. But I think ultimately this pattern starts to fail, because you can see the PPM2 starts to decline, at least being projected as we go several days out in the future. So we'll see how this thing plays out. And you're also seeing basically a flattening of the moving averages here. So ultimately, I guess if I got my everything perfect, and what I would wish for from a technician standpoint is that I would look for a hit on this 40/10-week moving average, both on the S&P and the NASDAQ. That's going to be your point where you're going to be able to, I believe, play off of this. And it doesn't necessarily mean that we're going to get, an immediate rally. But what's probably setting up here, and there's an argument for this. I haven't used my drawing tool here, but let's bring up the drawing tool. And so let's just bring this up real quick, because I think what we're really looking at here is this pattern. I kind of missed it. This is kind of a 1, 2, 3, and what we're likely to get is maybe some sort of wave 4 up here, and then a move higher in this pattern. So that's what be my expectation from the standpoint as far as this thing unfolds. That would be the perfect world to see it set up like that. And it is my expectation that would be the case. I don't think we get too big of a move down in this range, just because of just the 40 being up like it is. And if I brought up the weekly, you'd see the weekly is insanely strong as far as a support line. So just expect to see that continue to go up. So back to the Russell here. Let me turn off the probabilities just for a minute here. But you can see Russell's still kind of forecasting a little bit of a rollover. And I think what we're seeing here, this is kind of a mess. Let's go to weekly for a minute. We haven't done that. So let me just rescale everything. But this is really the same pattern we've been in. And I've talked about this a lot going back over a year ago now. And this just looks like we're stuck. We're not going up, not going down. PPMs, I have them set so they're not able to calculate here at the moment. But it looks to me that it's more sideways. We do have at least a pivot down here at around the 1760 level, just rounding numbers off. We still have some upward projections, but this is nothing to be excited about. This is really just more of the same consolidation. And, I've been told about 3 or 4 times this was a bear flag, but it doesn't break down. And really and we'll go through the details here. I'm just going to punch it out for a second. And we start to look at the daily chart or the monthly. You can see this mess is just part of something bigger, but we are seeing, and I'll cover this in detail on Sunday, is that we are seeing some potential explosive type patterns on the PPMs coming off a low. So there's still hope, folks. There's still hope. All right, we'll look at the 10-year next. And 10 years just kind of waffling along. What did I tell you? Yesterday we traded up around that almost toward 377 was the high. Close with 370. that we're probably going to come back down, just stay in this range, hover around this 10-period moving average. It looks like we've got, this is a weekly chart I brought up. So we do have maybe a couple more weeks, but then some weakness, and there is some downward Fibonacci targets, which are fairly bizarre. I think this is what I call, let me draw something in, and sometimes I reference things, and I just want to make sure everybody sees this. But really what this is, these are what I call island projections, and I think this is just another island. So what happens is the market, it projects this off of the Fibonacci tool, but it never gets hit. And the only thing that would signify that this is going to get hit is the fact that the market would start to see some extreme weakness. If these algos are right, as we come out into, let's say, end of August or so, that's where this thing starts to look a little weaker from that standpoint. Let's go over to the daily real quick, because it really is literally just a sideways type movement. It becomes painfully obvious here. Let me rescale this so you can see it, but this is the range. There is another several days coming into early next week with this thing sitting here locked in this range. We should stay above this 40 here, so don't expect much. The fib targets are probably valid, and they put us down, and I've been harping on this number for probably the last couple of weeks. 360, 380 is the range on the 10-year right now. Quick look at the 2-year. It's still got that upward slope, same old, nothing's really changing. We trade a little bit below it. So worst case is we get down to the 21 that's forecasted. The 21 is right now 460, call it 464. But that range, if you use the market grid, that's going to get you probably the best range. 79 on the upside extreme, 62 on the downside. So there is a new Fibonacci target on the downside coming into play here, but the algos are suggesting more positive, so I would expect that 21 to hold at that 4. What did I say that number was? 443 is actually no, 463 is that number. All right, so look at crude oil, back and forth, still holding around that low end range. We printed down to 67.05, ended up closing at 69.56, so rebounded right back into the pattern. That fib target's there, been satisfied, but it's sitting here. Potential 64 is a new target on the downside. But this, I feel like I'm a broken record because these things aren't changing very quick. This is daily, but we look like this downward slope is going to continue. So we're gradually inching prices down. So a couple of days ago, we printed a low of 67. And then today, even though we reversed, we printed down to 67.05. So just down to that level again in reverse. It's going to take a little bit. We're going to have to get above $71 to actually make a difference and start to see some forecast of higher prices. The only thing out here is PPM 3 is actually suggesting that that could happen. All right, we'll take a look at gold. Continues to drift lower here, down to 1916. Low yesterday down to 11. Once again, I've been really harping about this thing going down into probably these old Fibonacci's. This is an island right now, but around 1850, 1860, it looks like we're just on a path to lower prices there. And they're trying to punish Peter Schiff again. So anyway. All right, so here's daily Bitcoin finally starting to get that pullback. You can see the algos are about to roll this over. We're right into that moving average. We should hold here, but in the next couple of days, I think we get into this zone here. Let me draw that in just so you folks can see exactly where I'm talking about here. And it's right into this little zone right here. We should trade into this rising 21 period moving average and see that come right up. This is going to be your support line right there. And once you should bounce off of that, you got PPMs down here looking pretty good, although some days out, we look like we're going to get some decline here and maybe end up with something. Maybe we end up with some kind of consolidation along this line. And I think the key level there to pay attention to is the chart I'm going to show you next, which is the weekly chart. And this is, if we trade down to this 10-period moving average, this is going to be a major play there from that standpoint. I think longer term, whatever that means, let's say into year end, it looks like we've got a pretty favorable market. Whether it's all about these ETFs that are coming out, we'll find out. They're not out, they're not approved, but we'll see if they actually come into play. Okay, folks, that's going to do it. I told you we'd be pretty efficient tonight, and we were. Didn't get a chance to look at many of your comments, but appreciate everybody being here and being part of the community. Make sure you hit the like button before you leave. We should have at least 160, 200. That's not a lot, but still getting about around 3 to 4K views every day, so that's good. So a lot of folks are sleeping right now. I have a fairly big crowd in Europe that watches. So anyway, thanks again for being part of this thing. Really appreciate it. And we are getting very, very close to the release of these algos. And what I plan on doing is probably early next week, we'll do a live stream intraday so you can see some of this stuff work. It's like really cool. I can't wait to show you because it was, it's funny for a guy who's been around as long as I have. I had one of the most educational days that I've had for a very long time, and I'll share all those findings, both in the videos I'm putting together for the algos, but also on the live stream and on the channel. Once we get everything out there, it's just kind of silly to talk about until they're out there. So hang in there, almost there. I can tell you we're really, really close. So appreciate it again. Make sure you hit the like button. We'll see you folks tomorrow, same time, be the final view for the week. See you then. Hey, that average that you're talking about is 14,288. Thanks a lot for the super chat. Thanks. Yeah, I did forget we do have another long weekend coming at us again, don't we? All right, folks. See you tomorrow. Thanks, Pamela, AKA. Hey, David, if you hear me, send a request to info@kendallreport.